Hello everyone, welcome back to Unday Radar Talks. Supermicro computer stock fell 6.8% on Friday. The recent frenzy of selling by investors in technology stocks has made the stock's rebound difficult, and in the end, the bulls failed to defeat the bears. Judging from the stock price trend, the bulls also tried to strongly block the bears, but the panic in the market did not lead to much capital flowing into the stock. But the situation on Friday seemed a little different because the trading volume on that day was significantly enlarged. Although the stock price was still falling, the funds flowing into the market seemed to have increased significantly, which is a positive sign. The current price of the stock has deviated significantly from the 5-day moving average again, and the position of $445 has lost about 13% from the current price, which means that two profit margins have been opened between the two prices. So it is very likely that long capital will enter the market to take over the chips at this time. But this does not mean that the stock price will not fall further, because the bullish force at the $389 level may still be weak, and it is also possible that the stock price will fall further to accumulate more rebound strength. But I think there may not be much room for further decline, and a rebound may come soon. Let's take a look at the 15-minute chart of the stock. We see that the stock has almost similar stock price trends from September 3rd to 5th. After the market opened, the stock price rose strongly with a large trading volume, and then the stock price fell slowly. No matter what the real situation is reflected by such price behavior, the trading volume in these 3 trading days has gradually decreased, which reflects that the selling pressure faced by the stock has also gradually decreased, because the stock has fallen too much before, so it is normal for the market selling force to gradually weaken. However, we see that the situation of the stock seems to be somewhat different on September 6th, because the decline in the stock price and the trading volume on that day were significantly enlarged again, which means that a large amount of long capital may have intervened in the stock on that day, because the signal of long capital maintaining the stock price in the afternoon trading of the stock is obvious. Let's take a look at the capital flow data of the stock. We can see that the capital of the stock was outflowing from August 30th to September 5th, but the capital flow data in the last 3 days has abnormal changes. The net capital outflow of the stock on September 4th was as high as $127 million, but the trading volume on that day was significantly lower than the previous 2 trading days, which means that long capital may have adopted a passive strategy of taking over chips. However, what is more optimistic is that the proportion of funds flowing out of the market from September 5th to 6th has dropped significantly. Although the stock price still fell sharply on September 6th, it had a net inflow of $26 million. Although it is not much, it still sends a signal that the stock price is about to bottom out. Let's take a look at the market position distribution data of the stock. We can see that due to the continuous decline in the stock price, the current position profit rate of the stock is only 3.8%, so it is time for the stock price to rebound. $445 is the top peak of the current position of the stock, and the current price has opened up a profit space of about 15% from this position. However, due to the further decline in the stock price, the stock has generated a large number of positions again below $409, but the optimistic thing is that most of the positions on that day were generated between $393 and $385, and $389 was its peak, which means that the stock price may have a lot of capital entering the market around the $389 level. Of course, as mentioned earlier, the intervention of long capital does not mean that the stock price will not continue to fall, because the resistance above $400 is very large, so the bulls need to accumulate more rebound power in the area below $400 to fight against the bears. But I think even if the stock price falls, it will not go too far, and it may not rebound more than 4%. Of course, a more positive result is that the stock price opens high and then goes high. In short, I am currently bullish on the stock, and a rebound may come soon. Okay, guys, this is my price prediction for Supermicro computer stock. Thank you for watching. If you like my analysis, please click the subscription button and give a thumbs up. I will bring you more latest price predictions for popular stocks later. See you in the next video.